This is the London Fintech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is London Fintech Podcast, episode 139, brought to you in association with Smart Pension. And I'm delighted to be joined today by Peter Cook, head of all non-US sales at Prime Revenue, to talk about supply chain finance. In a prior incarnation, Peter spent over 15 years at HSBC in global trade and receivables finance, so there must be little he doesn't know by now. Anyway, talking of trade, receivables, supply chain, buyer, vendor, finance always confuses me, as market participants tend to use completely different terms in completely different ways, or at least it seems like that to me. And it was certainly true for LFP139 and 122, the last two fintechs to talk about this area on the show. One way or another, it all amounts to various forms of working capital finance for folks who are dealing with the real world, buyers and or sellers, and shipping physical stuff, without which our homes and offices would be rather empty. So rather like the plumbing and electricity in your house, it is essential even if it is out of sight to almost all of us. Prime Revenue is, however, at a completely different scale from those fintechs. It was founded in 2003, so I'm not sure what to call them. They're not entirely old school, as they were founded this century, but equally they're no newbie either. Anyway, whatever we label them, they've certainly achieved phenomenal success over the period. They facilitate more than $200 billion in payment transactions per annum for over 20,000 clients, have over 100 funding partners, and deal with over 30 currencies. They do all this on what they call a single cloud-based multilingual cross-border network. I wonder what one of those is. No point in me wittering anymore. Given those stats, I'll just try and set a first here and sit quietly in the corner. Plenty to talk about, so let's get on with the show. Hi Peter, thanks for joining me today.
Thanks Mike, delighted to be here.
So it's a Monday morning, it's the last day of September, and we were talking in Lift all the way up about the usual Monday morning commuter problems in London. Mine was not a cow on the line, but it was a tree on the line, so I never made it. And you said there was also somehow, I didn't quite understand this, a tree on the line on the district line, or
yes,
something.
Read into that what you will. Leaves on the line, perhaps.
Leaves on the line blown down the towel. Actually, of course, the district line is outside, isn't it?
Yeah, it's a combination of inside and outside, but they'll come up with some excuse. It doesn't matter where it is.
Yes, exactly. It's just a bunch of words. They didn't really mind, do they? And in terms of kicking off the show with those things which aren't quite as exciting as supply chain finance, otherwise known as the rest of life, and leading into your career journey, you were telling me that you were in the music business, or almost in the music business. I wasn't quite sure which one.
Yes, I was on the verge of becoming a very great and revered rock star once upon a time.
Were you the fifth member of ABBA that I remember reading about?
Yeah, so my secret's out, unfortunately. Yeah, originally from Sydney, Australia, and so I had a musical upbringing, and I ended up finding my way into a band there, and we did quite well for ourselves. We actually funded the recording of a record, which is on Apple Music and Spotify today.
Called
The Inertia Conspiracy.
And the group was called?
Halogen. There you go. Look it up. Have a listen. So we actually funded that record by recording a jingle for our lead singer was a graphic designer. So he produced an advertising campaign for a shopping centre and convinced them that they needed a jingle as well. So
fantastic.
We funded the record that way.
What kind of music was it?
We were sort of on the coattails of the whole Britpop thing, even though we were 10,000 miles away from Britain. But yeah, it was that style.
You were Ozpop.
Ozpop. There you go.
Okay, and so having got an album out there, presumably in your minds there was some chance that you might carry on in that direction as career, and sort of why did it go one way or another in the end?
We were on quite a trajectory actually, and we received a contract from a record company, so we were on the verge of being signed. Anyway, long story short, one of the members of the band got very, very sick at that time, needed some substantial treatment. I'm pleased to say he's actually alive and well today, but it was looking grim, so it kind of derailed us. It wasn't supposed to be.
Yes, I recorded just for the want of watching something different. I think on Sky, there's a whole series of classic albums where they talk about making classic albums.
Yes.
Of which one of my favourites was the Deep Purple making whatever that album is, that Smoke on the Water was done. It had all fallen through, and they got some empty hotel in December which wasn't heated, and they were all crowded into one room. And for some reason, I don't entirely remember, all the recording stuff was in a bus outside. So they'd play some stuff and then have to go freezing cold in the snow wearing next to nothing. Listen to it, and then came back. So I think that was one. And then just last week we were listening to Fleetwood Mac and Rumours, where of course everybody was going out with everybody else was divorcing, and it was complete, utter chaos. But somehow the kind of mixture or tensions created, I mean, it's not my kind of music, but there's some fantastic songs on it, created a classic album. So it does seem to be the case that you need some kind of artistic tension in the band.
I think that's right, yeah. And, I mean, if you think about those stories you just told me, even the sound of those records would not be the same as what it was today without all of that going on, right?
Yeah, I mean, 2 lots of them were getting divorced, and they were stuck in the same room all day for 6 months. I mean,
yes.
Can you imagine?
Yeah.
You know?
Yeah.
So, yes, exactly, it absolutely comes over it in it. And, I mean, a prime example is the Beatles. They've got the sort of sweet and sour with McCartney and Lennon.
Yes, that's right. You can't be in someone's pocket for that long without it creating some tension, let's say.
Yes, exactly. Well, maybe in a parallel universe, you guys did become the new ABBA or Blur or Oasis or something like that. Your mate didn't get ill, and sadly in that universe, no doubt your alternate you would be very disappointed not to be involved in the world of, was it supply chain? I forget all these phrases, but we might as well start with
supply chain finance.
Supply chain, global trade, receivables, that kind of stuff.
I always would have wondered what would have happened if I'd gone into supply chain finance. You're right.
Yes, exactly. So from your nascent and by the sound of it, successful at the start in the music business, how did you end up where you are today? I mean, I don't just mean London, because I assume you took an aeroplane at some point.
Yes, yeah. Well, look, I found my way into banking in Sydney. Actually, my dad was a banker, and my cousins were bankers, so it was kind of in the family, and I was kind of the black sheep in some respects there. But it was kind of in the blood. I talked my way into a job I had no right to be in, and studied very hard and started to build a career in banking in Sydney. You know, the more I got into it, and let's face it, banking is not today what it once was, back in those days. But the more I got into it, you know, I really enjoyed it. And the thing I enjoyed most was, and I think you said in your introduction, you know, a lot of what we're dealing with here, particularly on trade finance, is real. It's real stuff, real goods, real services being delivered, stuff in containers on ships going from country to country.
It's not just derivatives on derivatives on derivatives.
Correct, yeah, this is real stuff. And that's what appealed to me. So I found my way into HSBC Group, and I spent the best part of 16 years there. And through most of that journey, I was involved in some way with trade finance because of those reasons I just described.
And when did you come to this country?
2010, I was invited by HSBC to come on a secondment basis for a couple of years. They were piloting some new thing here that they obviously needed my help with. And so I spoke to my wife, and she said she was just pregnant with our second child at the time. So she said, I'm not going to be working anyway, so let's go. And then almost 10 years later, here we are.
So your Australian passport presumably doesn't get used much. Do you want to give it away? Because I'm a bit fed up with the politics over here.
Yes, perhaps we can do a trade.
Yes, do a deal. I see. Okay, so diving into this topic then, and as I say, it's a certain degree of resignation over the vocabulary, either that or I've run out of brain cells at my age. Because despite having been in the city one way or another for over 30 years, I just get confused every time about supply chains, receivables, mumble, etc., etc. So do you want to give us a simple topology from your long-term perspective in the industry in terms of how this stuff chunks up? Presumably the vocabulary confusion arises because this stuff has been going on for 10,000 years and, you know, in different pockets has been called different things.
Correct, yeah. Let's make it real and keep it real. So I think over those 20 years that I've been in financial services, I've had a lot to do with trade finance, but really what we're talking about here is for CFOs and treasurers and the like, it's cash flow. We're talking about cash, and cash always has to be a strategic priority. And you talk about a lot of interesting things on your podcast around AI and robotics and all these blockchain and all these sorts of things going on at the moment. So perhaps this topic isn't as sexy as robotics, but robotics needs cash, right? R&D needs cash. Everything needs cash. And so what we talk to CFOs and treasurers about is cash.
And of course, it doesn't really matter whether you're old or new, but the majority of businesses go bust, not because they're making a loss, which of course most fintechs are, but actually because they run out of cash.
Yeah, you need cash to fund growth and expansion in a company, and just to ensure that you're adapting to the rapid change and disruption that I just described. So there's almost no industry that's untouched by a huge amount of disruption at the moment.
And in terms of your 20,000 clients, what kind of industry segments are they in?
A whole range. So anything you could think of that's reasonably capital intensive, as I just described. So any sort of level of manufacturing. Automotive is a big one if you think about the disruption going on in automotive at the moment with the move to ride sharing and e-mobility, etc. And then retail is another, obviously ripe for disruption at the moment. So retailers investing in e-commerce or new ways of selling and delivering to customers. So there's a real range. Pharmaceuticals is big. Supply chain finance as well. Anything with a lot of R&D need to burn cash, right?
And in terms of who's doing this stuff, I assume mega banks like HSBC or Citigroup or people like that do this because it's kind of bread and butter global business for global banks. As I say, I've had a couple of fintechs on the show who are the sort of want to be the new little mammals eating the dinosaurs' eggs and growing. So where do you see yourself, and of course that's a binary thing, but it's a spectrum, where do you see yourself? Do you see yourself as a mid-level player who has the advantage of being more nimble than the old ones and a bit more sort of sexy with the technology, or do you see yourselves as sort of an established player by now, or does this sort of never enter your mind?
It's a really interesting dynamic at the moment. So Prime Revenue is very old for a fintech, right? So 16 years old, that's a long time in fintech. We're very deliberately not a bank for reasons that I can come on to a little bit later. But also we partner with banks. So we've got a bit of a co-opetition thing going on with many, many banks actually. Outside of banking, we are by almost any measure the largest player in this space.
I see. So forgetting sort of old and new, you're the largest non-bank supply chain finance player out there.
By almost any measure, number of clients, revenue, etc. And we are profitable and cash flow positive. We're not on our sort of second undersubscribed round of funding, etc. So
we'll come back to prime revenue later. But in terms of the market, I mean supply chain finance and cash flow management and things like that, how is it structured at the moment? And I mean in terms of the who cares, then obviously you say that presumably people selling stuff that moves around the world in a container and people buying stuff that moves around in the world in the container care about it. But
yes.
What is the market like?
Let me talk about what we define supply chain finance is, because you talked about receivables and payables. You've got dynamic discounting. You hear about factoring, letters of credit, all these trade finance instruments, and that's a bit of supply chain finance has become a bit of an umbrella term for all of those sorts of things. But when we talk about it here, and when Prime Revenue talks about supply chain finance, it's a structured solution that allows buyers to optimise their working capital so they can extend, harmonise, or even just protect payment terms they have in place with their suppliers, and at the same time give those suppliers access to early payment on their own credit. So that's very specifically what we define as supply chain finance. As an example, we work with a global food manufacturer at Prime Revenue, and they moved their standard payment terms from 60 days to 120 days with their supply chain, and it allowed them to generate billions of pounds of working capital globally. But importantly, their suppliers didn't bear the burden of doing that. So they were able to offer their suppliers access to their own credit, their supply chain finance program, and the suppliers could then take a payment as early as day 10. They're not waiting either 60 or 120 days for payment. That's basically the structure. We need to be clear on what we're talking about there. The way it kind of works is there's a commercial negotiation that goes on with buyers and suppliers, and that's no different whether there's supply chain finance there or not, right? So they come to a set of commercial terms, including payment terms, and then the supplier will ship their goods or deliver services and invoice the buyer. Again, that's just normal. Nothing's changed there. And the buyer will get that invoice, they'll review it, they'll accept it for payment, and they'll enter their details into their ERP system for payment.
Was that this sort of thing involving lots of buzzwords that I mentioned at the beginning? Your sort of cloud-based, global, multilingual, cross-border network? That's
a platform, but actually anything I've described up to this point is no different from how any buyer or supplier interacts, right? But the difference then is once the details are loaded into the ERP system, they're automatically uploaded to Prime Revenue's global cloud-based platform, and they're automatically available for suppliers then to see, to know what they have outstanding, and to take early payment on as well, if they wish.
So compared to when you started in the business, it was more paper-based back in the day, and documentation would be exchanged, and there'd be periods of time when, for example, if I'm taking the finance out, I wouldn't really know what's going on. Whereas now, a bit like, I don't know, you do online conveyancing, you can always sort of log on your phone on the way home and see where your conveyancing transaction is if you're buying a house or something. It's the same.
Right.
Tech supplies visibility.
A lot of it is about visibility, actually, because whether suppliers elect to take payment early or not, what they value about this is the visibility, the transparency, a date certain, sum certain, indication of how much they're going to be paid by when.
So you deal in industries, and obviously they're all different, but is it generally the case that the power lies with suppliers, or the power lies with vendors, or does it vary, which we assume it does? The prime example being, I saw last week, randomly actually, I don't really look at Twitter very much these days, I saw something from Stable, who have been on the show before and who hedge soft commodity prices, and they last week hedged, and goodness knows how, 5 million litres of milk. And I say goodness knows how because, as Richard Council, who's on the show, explained, the milk business has these really strange contracts that I never heard of called supply contracts. So if I'm a farmer and you're a big bad supermarket, I have to supply you with 1,000 litres of milk a week, for example, which I supply you, and then extremely bizarrely, somewhat later they tell me what they paid for it. Like, there's no price agreed, and I was like, really, really weird. Anyway, I mentioned that simply as an example that was in my mind, and of one where all the power lies with big vendor. The big vendor is just dictates the commercial terms, You don't want to supply milk to me, Tesco's, fine, good luck, Whereas there will be other cases, clearly, as you say, the sort of food manufacturer, where I did see some stats saying that the largest 10 companies control something crazy like 90% of the global food distribution or something like that.
Yes.
Even if I'm a Tesco's or something, and I'm buying from one of these vast combines, maybe the power is actually that the vendor has got the power. So how does this sort of power relationship work in general? Or just to see examples where the vendor is more powerful or the sort of purchaser is more powerful?
We see both of those things. I would generalise and say typically in most interactions we have, the buyer has more power in the negotiation, and they'll leverage some of that power over payment terms and price and volume and all those sorts of things. But of course, like if you're a UK, if Tesco, the example you just used, if you're a UK supermarket and you can't sell Coca-Cola or you can't sell Kellogg's, you're in trouble, right? Because that's why people go there principally to buy those sorts of products. So there's things that you might get away with not being able to sell, or you might all get from somewhere else. But in an example like that, then you'd have to assume that the supplier, being Coca-Cola or Kellogg's, would have a large degree of power in that negotiation, right? Yeah. Outside of that, if we look at the automotive industry or just any sort of manufacturing where there's a key critical component, the wheels that fall off the production line, really without that, you're not able to assemble your widget, whatever it is, without this, then it might not even be a very large supplier, it might be a very small one, but it's a critical supplier, and they may know that, and there'd be some level of leverage that the supplier would have in that negotiation. Of course, many buyers also invest in their suppliers for that reason. They may invest directly, or they may invest in supply chain finance to support the financials of that supplier because they know how critical that supplier is.
And in terms of the interaction between these people, and we've partly answered the question here, let's say you've got a vendor from, for the sake of argument, Coca-Cola, and you've got a buyer from, say, Tesco's, as we use that example, and they get together, I don't know, every year or something, and they say, we want to change the terms this direction or that direction, that conversation is taking place. Now, as you've explained in the case study before of your food manufacturer, the availability of more sophisticated, more flexible supply chain finance can change the dynamics in that conversation. So I would assume that Prime Revenue is generally working with a vendor or with a buyer, as it were, behind the scenes, or do you actually sort of turn up and try and sort of oil some of these things or listen or...
I guess that's one of the differences between Prime Revenue and perhaps the traditional model that was offered in banks in the past, is the level of interaction we have with both of those parties, with the buyer and with the suppliers. So, and remember, this is not just about payment terms, right? So this is, you just mentioned, as you just mentioned, there's volume commitments, there's price, there's shelf space, there's exclusivity in a market. There's all sorts of levers that will be pulled in a negotiation between a buyer and a supplier. And so, yes, supply chain finance is something powerful the buyer can offer the suppliers in that conversation, and we get involved in that to help structure that conversation, to help in that negotiation, where supply chain finance can add value in that situation.
I see. So in terms of where the market is now, it does the same function that you would have had in ancient Assyria 4,000 years ago, i.e. finance as a supply chain. And as we've said, it uses computers, so people can actually see much more of what's going on, because back in the day you didn't go into your bank's files and look into the file and find the relevant piece of paper. So that's quite good. And at sort of that simple level, or maybe one needs to drill into a more complex level, what more can be done? I mean, what is actually happening in the market beyond just more sort of better, cheaper, faster, more visible?
Let me give you an example. So I'll just build a little bit on the global food manufacturer I talked about earlier. Again, just keeping it real. So they were finding that times were really tough because their sales were dipping because consumers, and particularly millennials, demanded less packaged processed foods and more healthy options. So you've got to react to that. This is the disruption I was talking about earlier. And also, emerging markets, right? So the people are eating more varied stuff, Western style stuff in emerging markets. So there's an investment required there. Okay, so protecting declining sales, invest in emerging markets. How are you going to do that? And the initiatives that they came up with were going to cost them £1 billion.
Big numbers.
This is big numbers, right? So this is not just skirting around the edges. So when your company comes to you in the finance team and says, I need a lazy £1 billion, okay, what are your options? So how can you raise $1 billion? Well, if you think about it in a CFO's shoes, you've got sort of 4 key areas traditionally that you would go to. So one is to raise debt. So you could issue bonds, you could draw down on a bank facility, etc. Watch your leverage ratios and just make sure you're balancing that. You could issue equity, of course, very expensive, more expensive than debt. You might be able to sell assets, sell off non-core assets. It might have an impact on the company. Probably least palatable of all is deep cuts. You're going to have to make cuts in the organisation. Again, how is that going to fund growth and innovation if you're cutting the workforce? So if you're raising cash and you don't want to explore any of those 4 options, then the 5th one is probably looking at your working capital. And it's surprising how many companies don't do that. So this global food manufacturer, they turned to supply chain finance, they turned to prime revenue. They generated incredible results, not small numbers. So £230 million in the first 12 months of the initiative. And then since inception of their program, they've raised £1 billion in cash.
And in terms of that then, in terms of what the industry is doing to kind of, let's just use a simple phrase, get better than it was back in the day, is there some aspect implied or actual there in terms of people like yourselves are in some way consultants who go into their offices slash spreadsheets and say, oh, look, you've got column F27 and G43, and if you connect this and mumble. I mean, is there a kind of consultancy here as opposed to just, I'm Megabank, yeah, okay, I'll give you a 3 billion line, it costs this kind of stuff. And I simplify that conversation, obviously, because it's not that simple.
There definitely is a lot of consultancy. It's a combination of technology and consultancy. So my team and our broader team is full of ex-procurement, ex-bankers, ex-finance professionals, an ex-CFO. So people that have been in the industry that understand the dynamics here. But then there's, of course, the technology piece, which is why we are a fintech as well, which sort of drives some of that analysis as well. We put together what's called a program design, which helps us to dive into that consultancy piece about where the value should be unlocked.
So in terms of lessons for smaller and younger fintechs, would I be right in saying then that obviously smaller fintechs, or newer fintechs, that's probably a better way, some of them are quite large, I mean, Funding Circle is on the stock market, they have focused more on, as it were, selling products. You can get, a peer-to-peer loan, or you can get a better exchange rate or something like that. And that's fine, although, of course, over the past decade or so, they're still struggling with turning a profit in that. Banks turn out to be not as old, dumb and stupid as they all were saying at the beginning, and then turn out actually, funny enough, to have people like you in have been in there for 15 years trying quite hard and doing quite a good job. So is it that you see that just for fintechs in general, there is a limit to selling, what should we call it, simple small commodities? So for the sake of argument, selling a square and a circle and a triangle and just trying to get out there and sell square circles and triangles with as much tech as possible and as little marketing overhead as possible. And that doing that, of course, there's plenty of room to go in that market. But actually, it's almost actually just like a commodity market in a sense, and that to go into more sophisticated, certainly B2B transactions, which is what we're talking about, and my experience as a merchant banker as well, is once you're talking about sophisticated B2B, the conversation is never as simple as, oh yes, we can do FX 0.01% cheaper than the next bank kind of stuff, or our peer-to-peer loan gives you 0.2% more interest than a bank. Is the next tier for them? I mean, when the current crop of good fintechs are 16 years old like you guys, do you see that there's an angle there where they need to be, certainly in B2B, more consultancy, solution focused? Yeah,
I don't think you can really succeed in this space if you're not, to be honest. I don't see 16 years on there being, I think it's inevitable there'll be some industry consolidation in fintech, but I think the successful players, the ones that will remain, are the consultative, the ones that do partner with customers. This is not something, FX is a great example, right, in terms of something that's highly commoditized. You can't deliver it like that. We often use the phrase internally here that procurement is where supply chain finance goes to die. If you don't invest time in procurement, who are the guys that own the relationships with the suppliers to understand what they need to achieve, what they want to achieve with their suppliers, and how they're going to deliver it.
And in your world, procurement means what? Because whenever I hear procurement, quite often relating to the civil service, it's, oh my God, this transaction's gone to procurement to be approved, and it's, oh no, this is like... That's sort of the graveyard of the deal, actually, because they're never going to approve anything.
Yes, yeah. So I mean, so sourcing or procurement is the arm. Often it sits in finance. Sometimes it doesn't, but it's the arm of the organisation that's just tasked with buying stuff, right?
I see. So anyway, it's very different in commercial organisations from somewhere like the government.
Yes.
Where you've got people basically saying, "Oh no, you can't. You've got to buy for it." PricewaterhouseCoopers rather than the small consultancy or something. And there's a whole bunch of rules and all that kind of stuff.
Yeah, well, in fact, the government's starting to look at supply chain finance as well now as a tool for them. So that's another interesting point about how you manage the dynamic, as you say, very different dynamics of procurement in public versus private business.
Yes, I mean, I think I take your point about focusing on the CFO. All commercial organisations, and particularly sort of ones in bricks and mortar type things, the CFO is super important because without him you go bust. Whereas going back in the day, Kleinworth and all that, everyone liked the people in finance because actually we had quite a good bunch, but they weren't the most prestigious people in the organisation because everyone else thought we could do that because everybody else was in finance.
Yeah.
But if you're in, I don't know, do ICI exist anymore? If you're in chemicals or something like that, it's just the FD who understands, quotes, money, and everybody else understands, I don't know, oxygen and liquid nitrogen and all this other stuff.
Yeah, that's right. So you have to get into their world and help them, and that's why we have some people internally that are not just ex-finance people. We've got such a breadth of experience, so they can actually bring that consolidative approach to a procurement organisation to help manage and make sure that there's value on both sides of that buyer and supplier conversation.
Interesting. Okay, so there's obviously a distinction between sort of the B2C world where Amazon has done quite well without sort of consulting with many people and just sells stuff. I mean, okay, it sells clouds as well. But once you get into sophisticated world, B2B is always kind of ad hoc. It's always kind of Savile Row suits as opposed to Marks and Spencer suits. So there's a limit to how far you can go selling Marks and Spencer suits where, do you want a 32 regular or 34 regular, sir? Once you get into the sort of tailored thing, every client is actually different. And it takes someone like you with expertise to fit the particular client. So that's all interesting and actually kind of recognisable to me from my old days in many senses. And where is the supply chain finance market going in the future, do you think?
Yeah, well, I think historically supply chain finance was really reserved for the largest investment grade companies and their largest handful of suppliers, let's say maybe 20, 30 suppliers. And to that end, actually, the landscape was dominated by banks, as we mentioned earlier. And banks offer some very valid solutions today. But where the market really is going is deeper into the supply chain of those companies, where banks weren't really able to cater for a lot of suppliers historically. So we're now seeing fintechs with smarter solutions that are capable of onboarding many, many more suppliers to those large companies. But the other point is the buyers themselves. If you think about the network effect of what happens here, so you have, let's use a fictitious example, so you have Tesco and Kellogg's, right, as we mentioned earlier, and then Kellogg says, well, hang on a minute, I've been a supplier in this program, this is absolutely fantastic, I've got my own supply chain, so I'm going to roll out a buyer program myself. And then Kellogg's, one of Kellogg's key suppliers says, well, hang on a minute, Kellogg's, I've been on the Kellogg's program for 5 years and this is fantastic, I'm going to roll out a program myself. And so you get this sort of network effect. But what you're actually doing there is stepping down the credit curve in terms of quality. It's moved away from the investment grade buyers into,
for example, Samsung or something.
Yeah, Samsung's another one. So it moves away from the largest corporates into the mid-market and into the sub-investment grade space. So that's really where this is going in terms of adoption, is the sorts of companies that we're now able to deal with. I think the other one is the private equity space. Okay, so we're seeing a lot of demand at the moment in the private equity space, which has not historically necessarily been where this sits, for the reasons I just described.
And to give a practical example, because we know the words private equity, and by now we just about know the word supply chain finance. So what does this mean?
So private equity sponsors with a portfolio of companies. So you get a lot of food and beverage companies that are owned by one particular private equity firm. It's a number that we're dealing with, Prime Revenue. If you're a private equity firm, so what are you focused on? Well, you're looking at...
Money, I think.
Yeah, well, you're definitely focused on money, yeah. I think things are getting more expensive to buy at the moment. Okay, that's the problem that you have to solve at the moment as a PE sponsor. So you've got your rising interest rates, certainly in the US, perhaps not here. Anemic economic growth, low inflation, trade tariffs and uncertainty around trade policy. That includes Brexit, right? And then there's more competition because there's a record number of buyouts in 2018. So you've got more competition for those portfolio companies. The price is going to go up. And what happens when the price goes up? Well, your expectation of returns needs to go up as well. We're dealing a lot with the PE space at the moment for those reasons.
So what happens? I'm Mr. P. I suddenly happen to be talking to you over lunch. And I go, oh, that sounds good. Can you come around, Peter, and sort out my portfolio of companies? Or can you work with us on this deal? I mean, how do they actually use?
I mean, it would be exactly that, but it would typically be, let's start with this particular company that we've purchased. We've made, it's typically debt-fueled. We don't want to put more capital in. But we need to do two things. So we need to, if you think about the investment life cycle that the PE house will have, in the shorter term, they want to drive up the valuation, make it more efficient, invest in innovation, etc., to make sure this company is at the top of its field. And then in the later stage, as they get sort of closer to an exit, then they want to reduce debt, right? So both of those things are going to need cash. So typically, the conversation will be, yes, we've got these portfolio companies. This one in particular here is close to it. We want to bring down its leverage closer to exit, reduce its debt. Or this other one that we've just purchased here need massive amount of R&D and investment, right, to get it to where it needs to be.
I see. So that's a kind of the consultancy kind of gig again. And one question I didn't ask, which is probably relevant in this context, which is, what is the sort of cycle of you dealing with someone? So let's just say that I am a private equity person. I say, oh, that sounds good. Can you come in next week? How long is the process of you coming in to see me or my companies until you've done deals and all this sort of hundreds of millions suddenly appears out of quotes thin air, unquotes? Is it day, week, month, year?
The easy answer to that, Mike, is as fast as they want to move. So we're about to sign a proposal today with a new customer that doesn't work with us up until today. And that conversation has really been turned around in 45 days. And then typically it can be a bit longer because there's a whole lot of internal stakeholder management that goes on here with procurement, with IT, with legal, etc. Right? And so it's as organised as that company is and how fast they want to move.
So we've done all that. We've signed the deal. We've had a sort of a beer to celebrate and maybe even some crisps. And then I say, okay, go and see Company X first. They're a bit of a headache for me. You pop into Company X. How long does it take you guys to work out what their real issues are, what their potential are, and come up with a solution?
Just as a rule of thumb, I'd say 6 months.
So it's a complex business, basically.
It's a complex business. It's highly consultative. There's a business case to be built. There's funding to be obtained. And then we put the program design in place and start implementation.
So these are complex transactions for large sums of money. But as you say, in terms of the direction of travel, it's getting for smaller sums of money for smaller companies, relatively
And it's
speaking.
long term. It's also long term. So you think about that 6-month investment at the outset of the process. But our oldest programs are 16 years old. So that company has been working with us for 16 years because this is not a one-time exercise. You don't set and forget.
It's not like invoice discounting. It's not I send my invoice to Market Invoice, they give me some money, and in 2 months' time it's all done.
It's not transactional in that respect, even though it involves transactions at the base layer. I mean, supply chains change, which we just talked about earlier about disruption. I mean, the various stats out there, but somewhere anywhere, depends who you listen to, anywhere between 45 and 70% of the FTSE 200 won't exist in 5 years' time. So there's so much disruption. Supply chains are changing. They're being rewired to adapt to the way that we buy. You and I buy stuff.
Excellent. Okay, well, that's a very comprehensive coverage, so thank you for that. I must say the one thing that I got out of it is that it sounds more interesting than the words on a page when I cut and paste them. And I think that's principally because, this may be a historic perspective, I'd just seen it more as a product that you flog, like, oh, here's a loan, it's LIBOR and a 3/4 or something. Oh, here's some supply chain finance. Give us a bunch of stuff and we can cut the rate to so-and-so. And that kind of market does exist. But of course, in terms of added value, then it's on the more complex, more sophisticated things that people with your experience are required. I mean, the commodity end of the market exists, but it doesn't require your kind of expertise to handle it. So before we wrap up the show, I'd like to thank all the listeners out there. I'd like to thank my brand partners for the podcast, Smart Pension, who are fast, secure and free. Check out their UK workplace pensions at autoenrolment.co.uk. So if Tesco's or Coca-Cola are listening, they can give you a call or contact you via LinkedIn. But otherwise, in terms of prime revenue, Peter, what messages would you like to shout out in case anybody listening is from other places other than Coca-Cola or Tesco's? Or Kellogg's, you mentioned Kellogg's, they can call you too.
Well, all of the above, very happy to talk to. Yeah, so I think my aim, Mike, was to make it a bit more transparent about what supply chain finance is and how it works and how it can very materially help companies. So, I mean, we talked a lot about buyers, of course, suppliers as well. So We'd love to hear from suppliers as well, the value that it unlocks for them. We had a small supplier at a UK supermarket chain here in the UK that was running a business out of her own home kitchen.
Oh, right.
Got an order for to supply 350 supermarkets nationwide. What a complete headache! How are you going to deliver that out of your home kitchen? And so by accelerating her cash, let's say, on that program, she was able to fund that growth and investment and just materially alter the size of her business. So we'd love to hear from suppliers as well. That's a really important point. This is supposed to be win-win for both parties.
And the range of transactions are roughly from the smallest sort of volume that you deal with to the maximum are what to what? 1 million to 1 billion, or I don't know.
Yeah. In some cases, even smaller than 1 million in spend. So it's think about a mother running a frozen meals business out of her own home kitchen. So that's probably the smallest end, through to billions. Yeah. So I guess my message would be buyers and suppliers. This is supposed to be a win-win. It can be very, very material. Okay. This is about equalization in the global supply chain. All parties benefit, and that does require some expertise, does require some consultancy to deliver that properly. I think the second one is, as I mentioned earlier, we have a co-opetition with banks, but we also work with around 100 other funders around the world, banks and non-banks. And so this is a great marketplace for funders as well. So if I think about banks and funds out there that want to see this as an investment, as a way to generate assets, in bank speak, assets is something they can derive the yield on there. We partner with all sorts of funders as well. So that would be my other shout out.
Yes, and the name has completely gone from my head, but I mentioned the last time I talked about these issues, LFP139, and what they're doing, they're parcelling up trade finance or whatever they called it into sort of little boxes such that investment institutions can buy them, thereby attracting another source of sort of funds from the investment market once you've made it into the kind of box that they're allowed to buy. Well, it's been very interesting, Peter. The time's gone by quite quickly, and it's really interesting to get an insight into things which sound prosaic, but like everything else, once you get into them, there's sort of whole worlds of sophistication on their own, involving a lot of problem solving as well as products and managing lots of moving parts. So I wish you every success in the future.
Thanks, Mike.
Thanks for listening. If you have consulting, advisory/non-exec or media needs in the FS or fintech space, get in touch with me at mike@londonfintechpodcast.com.
We could sit in a bend there all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moon ride, watching a happy moon ride. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. We are wild like the mountains and the trees. Can you see what I mean? Can you see what I mean? We fit in between the earth and the sky. Kiss the city goodbye, wave the city goodbye, wave the city goodbye, wave the city goodbye. Watch the firelight dance with me, 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 watch the firelight